Welcome to the table for the Friday, December 27, 2024 installment of Market Plus. Chad Hart, Jeff French back with us. Chad, we've been trying to get you to do this for a number of years, so thank you for finally saying yes.
My pleasure to be here.
When we try to do this before, you always book somewhere else. So I'm going to ask, what's the theme of the speech in 25 when you go out to talk to people?
The theme is controlling what you can't control, figuring out how to bring costs down in line with what our revenues can be, but having an eye towards looking at, again, it's not just cutting costs, it's controlling them, figuring out what adds to revenue, what doesn't. You could argue over the last couple of years when we had profits, well, then you could afford to experiment. Now's not the time to be doing that. Now's the time, what's tried and true, what adds to my bottom line, that's what we need to do.
Jeff, what's your speech going to be in 25?
Well, it's going to be tough because right now you look at future prices and they're both below the cost of production. But, farmers will plant. They're some of the biggest gamblers around. And, it's going to be a tough year. But we all know that, with weather and Mother Nature that things can change quickly. But right now everybody's tightening their belt for 25, no question.
So there's been no weather scare in South America. And I think I hear people who sit in your chair always say, we need a weather scare to send this market higher. We cannot predict in late December, early January, what that weather scare could or could not be. But we did get some rain at the end of the growing season, in the fall season in the upper Midwest. That sets us up for better soils. Does that mean the market will respond to say, it's not so dry, and if it is dry, you still grow trendline yields?
Well, initially they will say that. But the underlying factor right now is, we have a flush pipeline. We have some of the biggest carryouts that we've seen in 4 or 5 years. And we also have South American production as of right now that looks very big. I mean, there's private guys out there with 175 million metric tons only in Brazil alone. But you still got to get into January, February, March to see how that weather is down there. And it's just the nature. We said it on the first show that, these futures market tend to put in the worst case or the best case scenario when it comes to yield very quickly. So we still got a lot of growing season down there, but right now, the fundamentals are to the downside right now.
Well, that's encouraging, no. But Chad, let's keep going on this negative tone for a minute because it is a little bit of a reality check. I think you said sometimes they call you a name that's not so popular, not so positive. Yeah. How gloomy could things get?
Oh, things could get really gloomy.
What would prompt it to get that way?
Well, I want to frame it this way. When you look at our supplies, they've been incredible. But when you look at our usage, on the corn side right now, we're at record usage. Soybeans, we're not record, but it's within shouting distance. So when you think about that, our usage is basically as strong as it's ever been, and yet prices are down. That tells you it's probably a supply problem. Demand is doing everything it can for us right now. And that's what leads to problems here.
But who's going to plant less corn? Because, I get that question a lot of times of, well, let's just plant less. Well, then, as I think you're about to tell me, Brazil will just plant more and take your place.
Not only will Brazil plant more, but let's face it, that's the problem between looking at it from an individual perspective versus the industry's perspective. It always makes sense for the individual to plant something, even though the industry itself doesn't need more land in production. As a farmer, I have to plant to make money. The industry, maybe I need fewer people to do it. But that's why also you see the cycles that we go through. It allows us to ebb and flow. We're pulling folks in and out of the industry based upon what we can afford.
Jeff, if you could give me the individual names of farmers that are going to plant less, I want to write them out right now.
Corn?
Corn, but you never have that conversation with anybody. And what farmer is going to be part of the grander solution if I don't get paid or assisted in some way by helping this greater problem? There isn't one.
The list is small. Most guys will look at it as we're going to grow ourselves into profitability. They're going to throw everything they can to increase those yields in those bushels, which in the long run hurts, the price, which could be lower. So, I just don't see it. It's going to be tough. Do we see some reduced acres up in some fringe areas? When you look at bean prices, it's hard to pencil a profit. So you're going to see, I think, some less acres. Do they come into corn? We'll just have to see about that.
Depending on what, oh, sorry, you had something?
Well, I was going to say, when you look back at last year's acreage in total, we did shrink acreage down compared to 2022, 2023. Are we going to do that again here as we're looking forward in 2025? Usually farmers don't do that 2 years in a row.
But do you, I mean, either of you, do you ever hear, I mean, there was that anecdote starting to float around in August of bankers were not going to be as crazy of lending an individual producer an operational loan in 25 because it wasn't going to be profitable. We rebounded a little bit in the fall, but is it going to be the banker that makes that decision?
The banker will help assist that for sure. And, can you find farmers that are willing? I've run into one farmer over my 15-year career as an extension economist that got up in a meeting and said, oh, you know what, we all need to plant less. And I said, okay, let's have a vote on that right now. How many of you are in the room are willing to plant less next year in order to get better prices?
And everybody sat on their hands.
And even the gentleman that mentioned it to me, nope, he sat on his hands as well. So the idea is no. Again, as an individual, I'm going to bushel my way out of this problem.
Okay, so let's bushel our way out of corn because we're going to see likely an increase in corn. Are we going to be sitting here a year from now, Jeff, having the conversation if we've got too much corn, maybe we should plant more beans?
Well, I mean, if you look at it right now, and if we just grow trendline yield, yeah, I mean, you're going to probably have a carryout north of 2 billion bushels. Does that say 480 corn? No, it doesn't. I mean, historically, you have a 2 billion bushel carryout, you're probably in that 375 to 425 on the board trading range. So, but again, there's a lot of factors that go into this. We have a new administration coming in. The world could look like a massively different place this time next year. So I just, the economics is one thing, but, farmers, they're going to plant the corn, they're going to plant the beans, and, we'll let things shake out as they may here in the next 8-9 months.
Chad, I made you be negative to start. Now you can be positive. Is there a commodity that you like in 25?
Relatively, I still like corn over beans because when we look at that demand base that we have, it is much more stable. What we see there, it is less reliant upon international trade. That's helpful as we look forward there. And so that's where you're also seeing the concentration. The idea is as USDA looked forward, they said the same thing in their long-term outlook. That corn right now is the place where we go to, if you will, heal our wounds first. And then when that gets out of balance, then we tend to be able to move towards other areas. That's when we do tend to see the swings back towards beans, towards cotton, towards wheat.
Oh, cotton. We won't even start with that market
I know.
right now. Jeff, is there one that you like in 25 more than the others?
I mean, right now, you're talking the wheat market. I mean, the wheat market has been under pressure here. We're down here at 4 to 5 year lows. You look at 550 wheat historically the last 10 years, that's cheap. And we've seen some spread unwinding. It looks like some big, massive global traders were long the U.S. Chicago wheat and short the Matif. And they've been unwinding that, and that's why we've been down the last 5-6 trading sessions. So I just look at these wheat prices, and I would not want to be short wheat at these prices. And I think there's some upside. Also, you look at world carryout on wheat, we're down here at 8 to 10 year lows. So from a pure fundamental standpoint, I like the wheat right now.
Is there a livestock that you like better than the other?
I look at it as just the pure demand for protein. I don't think that's going to be shrinking unless we get to a price that it really starts to cut in demand. So I just see with the numbers of the cattle that we have, it's not getting better, meaning we are not growing this herd as of right now. And right now, the demand is not shrinking. So if I had to pick between cattle and hogs for 25, I like the cattle definitely for the first 2 quarters of 25.
What do you think, Chad? I'm
going to agree. I like cattle. In fact, I'm going to put it this way. I like the cattle. I like the chickens. I think hogs are sort of in an interesting spot here because if we think about if prices get too high, where do consumers trade down? And I think you've seen more of a push to move directly from beef to chicken than you have traditionally beef to pork. So that's why I worry a little bit on the pork side that it could get caught, even though, yeah, as you say, I think the protein gains that we're seeing will continue into the future.
I've been debating about asking this question, but I'm going to anyway. In the main program, we talked about the economy as a whole. And let's just say prices keep falling. The stock market keeps losing. We end up with an R. We end up with a recession of some sorts. Does all of this still hold up under those scenarios? I mean, we don't know what the scenario may or may not be, but do the commodities have their own individual plates spinning in the air that are keeping them higher or lower, depending on what happens to a greater economy as a whole?
Yeah, they definitely do. Because again, it goes back to, are you more reliant upon international trade like a soybeans or a cotton, or are you more relying on domestic demand like we're seeing with corn and wheat? And so that's where I think you'll see these differences. We're seeing them in our prices now. The reason corn looks better than beans is because of that strength that it's got, not only from international demand, but specifically domestic through ethanol. And that's helping it hold prices better than what beans is experiencing. So yeah, each commodity reacts to a general downturn differently. And so it depends upon what that balance looks like.
Do you see stability in 25 for the commodities?
Well, I'm a little more favorable because we've had the downturn. I mean, you could say that the grains have been in their recession here the last 6 months. Does that continue? I mean, we'll have to see. But I just think that, we've kind of put in the bottom here. I mean, obviously, we can go lower at these prices, but I think the degree of lower gets smaller and smaller at these prices. I'm bullish, but that's in my DNA.
That's the optimist coming out in you. All right, Jeff French, great to see you. Thank you so very much for the time. Happy New Year.
Happy New Year. Thank you very much.
All right, Chad Hart, good to see you. Thank you so much for making time.
Pleasure.
Great to hear from you. Chad Hart, Jeff French, a reminder to get signed up for that Market to Market Insider newsletter. It's free. Sign up at markettomarket.org right now. Next week, we will take a look back at the biggest stories of the year in rural America, and we'll have the commodity market analysis with Christy Van On Cheeseth. Thanks for joining us. Have a great week.